It's time for Futures in Focus. From Turkey's financial crisis to the U.S. trade war with China, emerging market contagion appears to be infecting commodities like copper in particular. It is closing in on bear market territory now. Let's bring in Phil Streible of RJO Futures at the CME. Phil, what do you make of the sell-off that we're seeing in metals? Let's talk copper futures in particular as we now see this entering a bear market. Is there the prospect of further declines here?
Yeah, I mean, if you look at copper futures are at a 13-month low, and this is really because of the trade war between the U.S. and China. Remember that China, they take into about half of all copper demand throughout the entire world. So as their economic situation starts to slow down over there, you're going to see their manufacturing, their construction really start to slow, and that's weighing in on copper prices. The dollar index also shooting up quite a bit because of the currency tensions that are going on with Turkey. That really also is weighing in as well. If you look at the rural areas in China, they are at one of their slowest growth rates. So these new developing cities out there, they're just not growing as they once were. And that really, again, is weighing into copper demand.
In your view, Phil, what's sort of leading here, right? Because first you had the lira crisis. Now you have it spreading into metals even as the lira starts to recover. You also have it now affecting other risk assets like the United States. So what do you kind of watch in the futures market to figure out where the next leg downward or maybe a bounce is coming from?
Well, I mean, if you look at like another metal like gold, for instance, that's at an 18-month low. This is directly a result of the tensions between U.S. and Turkey. So that's caused this economic crisis over there that they believe might spread over into other European markets as well as emerging markets. What that does is it hits the euro currency. The euro currency makes up 2/3 of the basket against the dollar index. The dollar index is skyrocketing. That weighs in on gold prices. Generally, when there's a crisis out there of any kind of proportion, investors flock into gold. So you really got to watch the dollar index. You've got to watch the gold market. You got to look for cues as far as interest rates starting to rise back up again. If you look at U.S. interest rates, 10-year looks like it's closing on about 2.85%. So if we start to drop below that, I think that's when you're going to have your capitulation point and markets turn around.
Gotcha. And Phil, talk to me a little bit about mood as well, which tends to be also potentially important in these situations, a sort of animal spirits idea. Considering that the sources of a lot of this are sort of far away, not necessarily close to home for us here in the United States, is there a panicked feel to any of the selling that we're seeing?
It started to feel like that on the equities when I came in this morning. We were down 150, crossing over that 200 level. You started to get that panic feeling. We were starting to talk about, back in like February when the Dow fell over 1,000 points. It kind of starting to feel like that. Again, you got to watch those cues, especially from interest rates, and watch the volatility index. That's another important component here that measures, volatility within S&P 500 options. That's starting to creep up as well, and that could be your fear gauge that investors want to look out for.